standing outside of the New York Stock Exchange during a historic blizzard, but the markets are still open for trade. My name is Ashley Mastronardi, and you are watching Taking Stock. Counting down to the close, everyone. It is Monday, February 23rd. This is Taking Stock. I'm Kristen Scholler, live from a very snowy New York City. We're going to take you live outside the facade of the New York Stock Exchange in just a few moments. We got a lot of news moving markets today. In fact, in just the past 72 hours after the Supreme Court struck down the administration's unilateral tariffs as unconstitutional, the president has fired back, signing an executive order for a fresh 15% global tax under Section 122 of the 1974 Trade Act, a bold gamble that dares the courts to stop him again. We're 48 hours away from Judgment Day for the AI trade. That's because NVIDIA reports Wednesday, and the stakes have never been higher, with the software stocks reeling from what's been dubbed as SaaS-apocalypse fears. Can Jensen Huang prove that AI is a tool for growth and not just an engine for disruption? We'll wait and see. We've also got Sam Stovall standing by to break down this historic volatility that we've seen this year, a historic snowstorm on our hands, and some historic market moves. Let's take a look at that closing bell podium. The NYSE Information Technology team doing the honors for the close on this snowy Monday. That's the NYSE Information Technology Group celebrating the closing bell here on Monday, February 23rd, everyone. Let's take a look at the tape to see where we finish. The S&P 500 on the move today. I see out of the corner of my eye down about 1% on the session, ending off of the lowest of lows, though we should say that. The Dow Jones Industrial Average down about 1.7%. The NYSE Composite down 1%. And the Russell 2000, the small caps, they were down about 1.6%. So definitely a risk-off tone today. You see some of those more volatile sectors, if you will, underperforming the market today. Well, joining me now to talk more about this volatility, what we've seen in January and February, as February is about to round out. I do want to bring in Sam Stovall. He's Chief Investment Strategist at CFRA. Sam, great to have you with us today. It is a historic snowstorm. Hard to say that multiple times fast, but we also have some historic moves within the market. What's on your radar as we're looking for February to come to a close?
Well, I guess optimistically, Kristen, I'd be hoping that February would post a positive return. Doesn't look as if that's going to be happening because now the whole year is negative. But if we had a positive January and a positive February since World War II, the S&P 500 posted a positive total return for the full year 100% of the time. So the indication would be that, yes, we can get through this volatility, but, you know, keep your fingers crossed that the full year ends up being positive. But looks as if the regular seasonality has kicked in, with February being typically a down month.
Interesting. Now, there are some concerns percolating around this technology space, if you will. I mean, those concerns have been palpable for the past few months or so. What are you seeing in terms of sector rotation, and what does the data tell us?
Sure. Well, we're seeing the sector rotation right now. As you had mentioned in the intro, it's certainly a risk-off day, with the alignment being consumer staples, healthcare, utilities, and energy. Not surprisingly, energy I call the fourth beetle because it does tend to hold up quite well in a recessionary environment. And I think because we are looking at late cycle sectors, industrials, materials, and energy doing well, combined with the defensive areas such as consumer staples and utilities, I think investors are worrying that maybe the 1.4% GDP growth that we got in the fourth quarter is sort of an indication that maybe this economy is slowing, that the job picture is weakening, and that maybe sometime in 2026 we could slip into recession.
Interesting. Look, I do want to talk earnings, Sam, because we're at the tail end of this earnings season. NVIDIA is one of the last companies to report. We have a few other companies on the docket as well. Takeaways from these results as they've been coming in.
Well, what's interesting is that management has once again done a wonderful job of managing expectations because according to S&P Capital IQ consensus estimates, Q4 25 earnings for the S&P 500 was expected to be up 7%. However, now it looks as if we're going to have a 12.7% gain, which would make the 65th quarter out of the last 67 in which the actual results have exceeded end of quarter estimates. And if we look to 25, 26, and 27 full year estimates, they seem to be a stair step upwards from 12.5 to 13.1 to 16%. So it looks as if Wall Street is still fairly optimistic about earnings growth for the several years ahead.
One final question here, Sam, is I mentioned obviously we're looking at probably about 20 inches of snow in Central Park. I do believe among the top 10 snowfalls of all time. If you go back before 1900, have you followed any of the data as it relates to extreme weather events like these and any potential impact on the market?
No, I think it certainly makes for interesting headlines, but doesn't really affect overall bottom lines. I mean, the same goes for hurricanes, which are much more destructive than snowstorms. What you typically find is that it ends up improving economic output because you now have to replace depreciated assets with brand new assets, and that tends to stoke economic activity.
All right, Sam Stovall is the Chief Investment Strategist at CFRA. Sam, great to talk to you. Thanks so much.
My pleasure.
All right, thanks again to Sam. Okay, everyone, let's take a walk. We are down here on the trading floor, and yes, despite what is a historic snowstorm, that time I got it right, we are open for trade down here on the floor of the New York Stock Exchange. It was today. The markets have closed. You saw that happen at 4 p.m. Eastern. I can make it through snow, and I'm going to make it through this trading floor as well without falling. So we're going to take you over to some trading posts to take a look at some NYSE notables and see some stocks that were on the move today. Yes, it was a down day, but we did have some big winners. And in fact, a few of those winners were NYSE listed stocks. So we talk a lot about AI. This is an interesting stock that speaks to the AI play. And this is NYSE listed Corning. Caught a big tailwind today. Take a look. Shares ended the session at 4%. Got a upgrade. UBS hiked its price target to a street high of $160 a share. Analysts say the glass giant is the unsung hero of the AI trade, moving from a low-growth utility play to a high-octane infrastructure powerhouse. The driver, a multi-year $6 billion anchor agreement with Meta to provide the fiber optic backbone for AI data centers. And as hyperscalers like Amazon and Google ramp up capital spending, Corning's glass is the essential plumbing. So shares surging as the market reprices its legacy name as a core AI winner. Take a look at Eli Lilly. That one's on the move as well. And some big news out of Eli Lilly. That stock up even more, closed up about 5%. So ended up actually outperforming Corning. But it's making moves to solidify its lead in the weight loss war, launching a new 4-dose quick pen for Zepbound. This FDA-approved multi-dose device delivers a full month of treatment in a single pen, directly addressing the supply and convenience hurdles that we've seen impact the sector. So Lilly's still the one to beat here in this GLP-1 race. Pretty impressive moves for what otherwise is a sea of red, and certainly not only some rotation going on, but I think investors and traders across the board, really looking at their portfolios amid some of the action that we recently saw with the Supreme Court's ruling on tariffs and, of course, the president's response. Well, FinTech TV lead anchor Remy Blair sat down with Tim Edwards of S&P Dow Jones Indices to talk about the future of capital markets. And let's take a look at that interview.
We are joined by Tim Edwards, Global Head of Index Investment Strategy and Managing Director of S&P Dow Jones Indices. Great to have you here. Thank you so much for joining me.
My pleasure. Thanks for having me.
Well, here we are as we kick off 2026, and this is the time of year that we're looking ahead. So, what would you say is the single biggest structural shift that you're forecasting, not just this year, but in the next decade?
It's very early days, but I think one of the key questions that people have been asking themselves is when and if there will be a rotation in U.S. equity market strength beyond that traditional superhero set, call it, Magnificent Seven or Top 10 or whichever, categorization you want to take. For 10 years, we've had leadership from the very largest companies in the US. It's very early days, but so far in 2026, we've seen what many people have been calling for, which is a rotation to increased breadth. So better performance from, for example, the S&P 500 equal weight index, or from small caps or from mid caps. And I think that dynamic is one that's very top of mind at the moment, connects to a lot of major trends, and is something that we're watching very closely.
And of course, we're here on the trading floor of the New York Stock Exchange, and we're continuing to monitor what's happening with the major stock averages, the indexes here. And indexing has spent about 5 decades driving feeds towards zero. So tell us what you expect to see, not just in the short term, but also the long term as well.
Yeah, that's right. The occasion for our event today is we're coming up on the 50-year anniversary of the first ever index fund tracking the S&P 500, created by Vanguard and particularly by your viewers may know the name Jack Bogle. And it's great to be celebrating that, but it took a really long time for these index funds to actually get any assets. Nowadays, they are a significant way in which investors around the world, but especially individual investors through ETFs, are able to access investment returns, whole markets, sectors, different pieces of the pie. The story of indexing for the past 10, 15 years has been one of significant growth, and that has been to the benefit of investors. Just to give you, one statistic that we use sometimes, compared to traditional actively managed mutual funds, the S&P series of US equity indices has been helping investors to save $52 billion a year in fees. That's a lot of money going back into investors' pockets, and I think something we can all celebrate.
And speaking of which, you're here at the New York Stock Exchange for this event in conjunction with Vanguard. So tell us about the move benefits beyond beta, and what does this mean?
So I think there is a evolution in indexing that's gone beyond just core popular indices like the S&P 500. So now there is a really wide range of different tools that investors can use. And there are questions about, where else will indexing become an important part of markets? So I could say, the bond markets is one piece of it. There's also a lot of interest, research being done by our organizations around and others around spaces like crypto, different tokens, and also private markets. So private credit, private equity is a space where currently there isn't the same level of sort of transparency and benchmarking that we're used to in the equities world. There's a lot of effort to ask ourselves the question, how can we bring greater transparency to that space? So that's what we're talking about upstairs. It's early days for some of those themes, but a lot of exciting innovation and development expected over the next couple of years.
It was wonderful having you here join us on FinTech TV. Thank you so much for your time, and thank you so much for sharing all of your insights.
Thanks for having me.
My pleasure.
All right, everyone, time now for a few fintech, crypto, and AI headlines. First up, the crypto winter continues to deepen as Bitcoin, Ethereum, and Solana all are down multiple percentage points on global economic uncertainty after the SCOTUS tariff ruling. Well, next up, hedge funds that helped fuel the surge in U.S. spot Bitcoin ETFs have cut their holdings by 28% quarter over quarter, according to data compiled by CF Benchmarks, as Bitcoin retreats and basis trade returns cool. Finally, Walmart says it's not going to cut jobs in the name of AI. Rather, the retail giant is offering free Google AI certification training to its 1.6 million employees as it bets on upskilling rather than layoffs. Well, now we're going to bring part two of JD Durkin's sit down with Bitwise CIO Matt Hogan. Let's take a look.
Tokenization right now is barely 0.1%, reflective and relative to all global assets. What is the unlock moment for tokenization to truly accelerate?
Yeah, again, regulatory progress from the SEC and from Congress, and then what you're seeing already, which is the largest asset managers building in this space. But the thing that crypto won't listen to is you have the chair of the SEC saying 100% of assets will be on chain in the next few years. You have Larry Fink, the leader of the world's largest asset manager, promising to tokenize all of his ETFs in the next 12 months. The world is shouting to you that tokenization is going to go from 20 billion to 200 trillion dollars in the next handful of years. We just need regulatory progress and we need more experiments. But look, it's happening. Just last week, BlackRock invested in Uniswap, the largest decentralized exchange. Apollo invested in Morpho, one of the leading decentralized lending platforms. The world is screaming at you that this is coming, and for some reason, crypto can't hear it right now, but they will eventually hear it over time.
Do you feel as if people are still dramatically underestimating how bullish tokenization is for DeFi? And if so, why?
100% for two reasons. One, the scale is just enormous. You mentioned it, 0.01%. There's $20 billion tokenized on chains. Global equities are $110 trillion. Bonds are $150 trillion. Real estate is like $250 trillion. Our mind can't wrap around how big that delta is. And then the other reason it's really important is because when the world is tokenized as 24/7, 365, every investor in the world is comfortable using a crypto wallet. And that means they're proximate to DeFi. They can use DeFi with those tokenized assets. They're proximate to stable coins. It's a giant on-ramp. So I think people underestimate the size, and then they underestimate the second order effects of what this means for DeFi, for layer ones, etc.
When people like Larry Fink at BlackRock and others build on chain, is it validation or is it more of an institutional takeover that pushes out some of those really early on crypto enthusiasts?
It's both. It's both. It's enormous validation. It's a view that the world is going to move onto this better technology. And for sure, it detracts a little bit from the cypherpunk origin of crypto, right? That's definitely true. For what it's worth, that's one of the reasons you've seen privacy coins like Zcash and Monero doing well, because Larry Fink and other soup coiners are stretching crypto into the regulated atmosphere. That creates a pocket for like true degen crypto, but that pocket is smaller. More importantly, though, pulling it into the regulatory perimeter puts it into a world with $1 quadrillion worth of assets. That's actually where you get the scale of crypto.
Where do you think we are with regards to institutional adoption? Are we early? Are we already mid-cycle? How do you view it?
Oh, we're super early. We're super early. In Q4, we had the wirehouses, Morgan Stanley, Wells Fargo, UBS, Merrill Lynch, approve Bitcoin ETFs for the first time. One thing we know at Bitwise is the average client invests after 8 meetings. Usually we meet with advisors quarterly. So you won't even see the flows from the majority of those wirehouse advisors for another 2 years. And then as we go further into the institutional stack, let's say pension funds, let's say endowments, let's say sovereign wealth funds, they are moving at an even slower cadence. So we've really just dipped our toes into the waters. We've seen what, $60 billion flow into the Bitcoin ETFs. That's going to be $600 billion over the next handful of years. It just takes time. Institutions move slowly. They do quarterly meetings. They need a lot of them before they get comfortable. But make no mistake, like the tide is rising. Maybe we're in inning 1. Maybe it's the top of the second, but it's in no way middle stream. We're really just getting started.
Matt Hogan, CIO at Bitwise, very grateful for your generous time. Thanks for joining us today. Nice to have you as always.
Yeah, thanks for having me. This was fun.
Welcome back to Taking Stock, everyone. Time now for startups, raises, and rounds. Well, first up, the Wall Street Journal reporting some AI startups are striking back-to-back funding deals at different prices, allowing lead investors to buy in cheaper while companies publicize much higher unicorn valuations. Next up, Gilead Sciences is acquiring cancer therapy developer Arcellx for nearly $8 billion in cash, a move aimed at bolstering its oncology pipeline. And lastly, TechCrunch reporting Elon Musk's Starbase City in Texas is set to establish its own municipal court, a move that further cements the company town model around SpaceX's rocket operations. Well, Cheddar's Chris Castellino has the latest in auto tech from CES 2026 in Las Vegas. Let's take a look.
Fresh off the line is the all-new Afeela One from Sony Honda Mobility. Sony and Honda have joined forces to create what they call a creative entertainment space on four wheels. This isn't just an electric vehicle. It's a rolling concert hall, gaming lounge, and AI-powered assistant, all wrapped in a sleek design.
This is the Afeela One. This is our first model, and it comes in two trims, the Signature and the Origin. We just started taking reservations last year for delivery later this year out of our plant in Ohio.
The goal, Sony Honda says, is to completely redefine the relationship between people and mobility. And that starts with 40 sensors packed into every inch of this car, including LiDAR, 18 cameras, 12 ultrasonics, and 9 radar units, all powered by high-performance AI chip maker Qualcomm.
This actually allows the car to perform at a L2 plus ADAS, which is essentially self-driving, relieving you, the driver, of the burden. And so with one touch, you can have an end-to-end journey, and we call this Afeela Intelligent Drive.
But it's what happens inside the cabin that truly sets the Afeela apart. This car doesn't just drive you, it gets to know you. Meet the Afeela Personal Agent, powered by Microsoft's Azure OpenAI.
This is designed to be not just a one-way assistant that you tell what to do. It also interacts with you. It learns your customs and preferences. It can see you in the cameras in the car.
Hey David, nice dark jacket looks sharp for a morning in Vegas. And I see you've got some company snapping pics. Are you ready to dive into the Afeela experience or just enjoying the vibe for now?
We're enjoying the vibe, but I'm also kind of hungry. Are there any good burger joints around here?
Here are 3 hamburger restaurants near you.
The AI noticed the driver, complimented his outfit, and responded conversationally to a casual request, all without saying, "Hey Siri," or "Okay Google."
So let's say you're watching a movie in the car with your passenger while you're charging the vehicle. You can have it center screen. It can also be synced to the screens in the back. You can move it over here to the side if you need to, say, look at your navigation here. But then when you're driving, a privacy filter will engage so that the driver cannot see what's over here, keeping them from distractions and keeping you safe on the road. The analog mirrors are there because of legal reasons, but the cameras allow you to have a wider range of view.
And for gamers, the Afeela comes with PlayStation Remote Play built right into the rear entertainment screens.
So if you have a PlayStation 5 or 4 at home that's connected to the internet, you can play your games inside your Afeela.
Then there's the sound system. 28 speakers positioned throughout the vehicle, including subs under the console and speakers in the headrests.
Most car manufacturers build the car and then put in the speakers. In this, it was reversed. They designed the speaker system with the subs in the middle so that the bass is centered. That way you get a more robust, resilient, and entertaining audio experience.
This high-tech electric sedan is also capable of a top speed of 146 miles per hour, with an estimated EPA range of up to 300 miles. The future of mobility isn't simply about getting from point A to point B anymore. Car makers are now focused on scaling autonomous, intelligent, and conversational technology. Are you ready for the ride? For Cheddar, I'm Chris Castellino.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Jargon Translator, where we make sense of the techie terms that keep popping up in your crypto feed. Today's word, layer 2. Sounds like a skincare routine, and I love me a skincare routine, but it's actually how blockchains level up. So here's the tea. Blockchains like Ethereum are amazing, but they're slow and expensive when traffic spikes. Enter layer 2 solutions. Think of layer 2 as the express lane on a crowded highway. Instead of every car or transactions jamming the main road, layer 2 handles the overflow, processes transactions off-chain, and then settles them back on the main blockchain. It's like saying, hey Ethereum, you keep being the backbone, we'll handle the chaos. Why does this matter? Because gas fees on Ethereum can feel like rent in Manhattan. Layer 2 solutions slash those costs and speed things up. Suddenly, buying an NFT doesn't require a second mortgage, and people have done it. Go ahead and check me. How does this work? There are different flavors. Roll-ups, they bundle transactions together and post them to Ethereum in one neat package. Think Costco for crypto transactions. State channels, like opening a private tab with your friend for multiple transactions, then settling the bill later. Sidechains, independent blockchains that connect back to Ethereum for security reasons. And here is the kicker. Layer 2 isn't just about saving money, it's about making decentralized apps usable at scale. Gaming, DeFi, NFTs, they all need speed and affordability to really go mainstream. That's the biggest criticism right now. Without layer 2, Ethereum would be stuck in traffic forever. And we all hate those traffic jams. Of course, it is not perfect, nothing is perfect. Security depends on how well these solutions interact with layer 1. Bugs, exploits, and bridge hacks, still a thing, but the innovation is wild and billions are flowing into layer 2 projects because everyone knows scalability is the name of the game and the name of longevity. So next time you hear layer 2, don't think skincare, think blockchain's glow up moment. Layer 2, because even blockchains need a fast pass to keep the vibes moving. And that is your jargon translated.
Thank you everyone for watching us today. We have braved the NYC blizzard. The snow has finally stopped, but we got some large size snowballs down here. Thank you so much for watching. Have a great day.